Question 1. From a practical standpoint, Jonathan owns a commercial photography studio in Sioux Falls, SD. During a major storm, wind damages the building and ruins expensive lighting equipment. His policy covers direct physical loss under a commercial property form with a broad causes of loss endorsement. He later discovers that a backup generator he rented was also damaged and it wasn't listed on the schedule of insured property. Jonathan files for both the damaged lighting and the rental generator. Which aspect of the policy would most likely result in denial of coverage for the generator? A. Proximate cause of the windstorm. B. Insurable interest requirement. C. Lack of scheduled property endorsement. D. Deductible not being met. Answer. Correct answer C. Lack of scheduled property endorsement. Explanation. Under a commercial property policy, specifically the building and business personal property (BPP) form, property must be specifically scheduled to be insured unless blanket coverage applies. Since the generator was rented and not listed, the policy likely excludes it. This reflects the principle of insurable interest and declaration alignment. Only property listed or covered by general endorsement, e.g. leased equipment endorsement, qualifies for indemnity. South Dakota law follows the NAIC model policy structure, which enforces that unscheduled third-party or leased property is not covered by default. Thus, C is correct. The proximate cause, windstorm and deductible, are not relevant here because coverage is excluded out. Question 2. In light of recent developments, an insurance producer in South Dakota, Kelly, is promoting commercial umbrella policies to clients. She claims these policies will always cover anything your primary policies don't, including excluded losses. Fellow producer reports her to the South Dakota Division of Insurance. Which unfair trade practices is Kelly most likely violating? A. Twisting. B. Rebating. C. Misrepresentation. D. Defamation. Answer. Correct answer C. Misrepresentation. Explanation. Is Kelly's claim misleads consumers by implying umbrella policies override exclusions in underlying policies, which is factually inaccurate. Umbrella policies provide excess coverage and sometimes broader coverage, but do not cover all exclusions, especially intentional acts, contract disputes, or certain types of liability. This constitutes misrepresentation, violating SD codified SS8 335, which prohibits making untrue, deceptive, or misleading statements in connection with insurance sales. Twisting. A involves policy replacement, misrepresentation. Rebating. B is about giving unauthorized inducements, and defamation. D refers to harming reputations of competitors or insurers. Question 3. To determine whether a business qualifies for a business owner's policy, BOP, an underwriter reviews the application for Ted's High-End Wine Bar and Restaurant. The establishment generates $7 million annually and includes late-night live music and valet parking. Why would the underwriter most likely reject Ted's business for standard BOP? A. The business operates late hours. B. It exceeds the revenue cap for BOP eligibility. C. It serves alcohol. D. Valet parking increases liability risk. Answer. Correct answer. B. It exceeds the revenue cap for BOP eligibility. Explanation. BOPs are designed for small to mid-sized businesses, typically capped at $5 million annual gross sales depending on insurer underwriting guidelines. Ted's $7 million revenue likely exceeds the eligibility threshold. Additionally, operations such as live entertainment or alcohol service may increase liability exposure, but these do not disqualify an applicant unless stated in underwriting rules. South Dakota insurers follow NAIC BOP eligibility guidelines, which prioritize predictability and limited liability exposure. Thus, B is the primary disqualifying factor, making it the correct choice. Question 4. During the process of adjusting a claim, an insurer discovers that the policyholder, Claire, knowingly failed to disclose that the insured property had been vacant for 9 consecutive days. A fire occurred on day 91, causing severe damage. How does the vacancy clause in a standard commercial property policy affect this claim? A. The loss is paid in full. B. Only partial payment is made. C. The fire loss is excluded due to vacancy. D. Vacancy affects only theft, not fire. Answer. Correct answer C. The fire loss is excluded due to vacancy. Explanation. Most commercial property forms contain a vacancy provision which excludes loss or damage caused by vandalism, sprinkler leakage, building glass breakage, water damage, theft, or attempted theft if the property has been vacant for more than 60 consecutive days. While fire losses may not be excluded entirely, many policies reduce payment by 15% or exclude losses completely based on form language. The ISO standard policy form allows exclusion or reduction due to prolonged vacancy. South Dakota follows the NATE model, meaning policy wording governs the outcome. Claire's non-disclosure compounds the issue, potentially violating the duty of good faith. Question 5. Taking into account the principle of indemnity, Kevin's office building is insured for replacement cost coverage. After storm damages the roof, Kevin receives an actual cash value (ICV) settlement. He is upset and demands full replacement cost. Which of the following conditions must Kevin fulfill to receive full replacement cost? A. Submit proof of ownership. B. Repair or replace the damaged roof. C. Hire licensed contractor. D. Notify the insurer of his intent to upgrade. Answer. Correct answer. B. Repair or replace the damaged roof. Explanation. Under the replacement cost provision, insurers pay actual cash value upfront, and the remaining replacement cost is reimbursed only after the insured repairs or replaces the damaged property within a certain time frame, often 180 days. It supports the principle of indemnity, ensuring the insured is made whole but not enriched. South Dakota follows standard replacement cost endorsement rules. B is the correct answer. Merely submitting proof. A. Hiring contractor. C. Or notifying about upgrades. D. Do not trigger full payment without actual repairs. Question 6. When evaluating the merits of liability under a commercial general liability (CGL) policy, Leela's company is sued for negligence after customer trips over loose carpet in her store. The insurer denies the claim, stating that the accident occurred before the policy incepted, even though the lawsuit was filed after. What concept justifies this denial? A. Occurrence trigger. B. Claims made trigger. C. Retroactive date. D. Policy aggregate limit. Answer. Correct answer. A. Occurrence trigger. Explanation. CGL policies are often occurrence-based, meaning the incident must occur during the policy period, not just the claim filing. Since the trip occurred before the policy began, coverage is denied regardless of when the lawsuit is filed. This differs from claims-made policies where timing of claim matters more. South Dakota follows ISO standard language for occurrence-based policies. The occurrence trigger determines liability coverage, not retroactive dates, which apply to claims-made forms. Therefore, A is correct. Question 7. Throughout the course of managing a claim, an adjuster asks the insured to submit a sworn proof of loss within 60 days, but the insured delays submission for over 90 days without justification. What impact does this delay have under South Dakota commercial policy law? A. The claim is automatically denied. B. The insurer must still pay full benefits. C. The claim may be denied due to breach of policy condition. D. The claim remains valid if loss is obvious. Answer. Correct answer. C. The claim may be denied due to breach of policy condition. Explanation. Most commercial property policies include a condition precedent requiring prompt notice and proof of loss within 60 days upon request. Failure to comply can lead to claim denial, particularly if the delay prejudices the insurer. South Dakota statutes mirror the NAICS standard form requiring strict adherence to policy conditions. Courts often have this clause unless good cause is shown. Therefore, C is the most legally grounded and accurate choice. Question 8. Given the circumstances, Mr. Cheng operates a fleet of delivery vans and insures them under a business auto policy (BAP). One of his drivers causes an accident while using a rental truck during a surge delivery event. Mr. Cheng assumes the BAP automatically covers this. Which endorsement would have been necessary to provide coverage in this situation? A. Drive other car coverage. B. Hired auto physical damage. C. Symbol 7 liability extension. D. Employer's non-ownership liability. Answer. Correct answer. B. Hired auto physical damage. Explanation. The standard BAP covers owned autos listed on the declarations page. For rented vehicles, coverage must be explicitly endorsed. The hired auto physical damage endorsement 21 extends collision and comprehensive coverage to rented auto. Without this endorsement, only liability may apply if selected. South Dakota insurers adhere to ISO forms requiring endorsement. Non-owned vehicle physical damage, thus B is correct. Question 9. Among the various reasons a fidelity bond might not pay a claim, consider the case where Ellen discovers a long-term employee stole $50,000 over the last 8 years. The crime was discovered this year. She files a claim under discovery form bond. Why might the insurer limit or deny payment? A. The employee was never convicted. B. The loss occurred outside the discovery period. C. The dishonest act was not reported to police. D. The employee resigned before discovery. Answer. Correct answer B. The loss occurred outside the discovery period. Explanation. Discovery form fidelity bonds cover losses discovered during the bond period, regardless of when the loss occurred, but usually within a set look-back period, e.g. 1 year or 2 years. If the theft spans beyond that period, only the most recent losses may be covered. South Dakota uses NAIC model wording which requires strict adherence to policy period conditions. Therefore, losses beyond the discovery look-back timeframe may not be paid. B is correct. Question 10. By evaluating the risk of a chemical processing plant located near a floodplain in South Dakota, the underwriter classifies the business as high risk. The business owner insists that since no major flood has occurred in 30 years, flood insurance isn't necessary. However, the underwriter strongly advises coverage under the National Flood Insurance Program (NFIP). What is the primary reason for this recommendation? A. Flood is covered automatically under commercial property policies. B. NFIP covers business interruption without limitations. C. Flood is excluded under standard commercial property policies. D. Private insurers are required to offer flood insurance in South Dakota. Answer. Correct answer. C. Flood is excluded under standard commercial property policies. Explanation. Most commercial property policies, including building and business personal property (BPP) forms, specifically exclude flood as a peril. Insurers generally rely on the National Flood Insurance Program (NFIP) to provide this coverage. South Dakota follows ISO form exclusions, and flood coverage must be added separately via an endorsement or through the misconception that no flood in 30 years means no risk violates the risk pooling and law of large numbers principles, as catastrophes are unpredictable. Thus, C is correct. Question 11. With respect to employee dishonesty coverage, Marcus owns a small accounting firm and purchases a discovery form commercial crime policy. 2 months after policy inception, he discovers a former employee embezzled funds 10 months ago. He files a claim immediately. Under the discovery form, what condition must be satisfied for the claim to be valid? A. The employee must still be employed. B. The loss must be discovered during the policy period. C. The loss must be sustained after the retroactive date. D. The loss must be reported to the IRS. Answer. Correct answer. B. The loss must be discovered during the policy period. Explanation. The discovery form covers losses that are discovered during the policy period, even if the dishonest act occurred prior, provided it's within the policy's retroactive limit or no exclusions apply. South Dakota law aligns with the ISO commercial crime coverage forms. Discovery is defined as the moment the insured becomes aware of facts that would cause reasonable person believe loss has occurred. Therefore, B is correct. A, C, and D are not required for coverage. Question 12. Throughout the course of managing her small business, Tasha modifies the use of her building to include indoor storage of flammable liquids. She does not notify the insurer or update her policy, which concept may limit or void coverage if a loss occurs due to the new use. A. Policy endorsement clause. B. Breach of warranty. C. Coinsurance clause. D. Representation and concealment. Answer. Correct answer. D. Representation and concealment. Explanation. If Tasha concealed material facts like storing hazardous materials, the insurer can argue material misrepresentation or concealment, violating contractual obligations under SDA 81144 and NAIC Unfair Claims Settlement Practices Model Act. The insurer may deny or reduce coverage based on this breach. The original risk profile was altered Insurer was not given the chance to underwrite accordingly. Therefore, D is correct. Warranty B would only apply if specific promises were made in the policy. Question 13. In contrast to specific insurance, blanket insurance is designed to cover a broader range of assets. Which of the following best defines the key benefit of blanket commercial property insurance over specific insurance? A. It eliminates all coinsurance penalties. B. It applies a single limit across multiple locations or items. C. It provides automatic replacement cost coverage. D. It guarantees unlimited coverage during a policy term. Answer. Correct answer. B. It applies a single limit across multiple locations or items. Explanation. Blanket insurance provides flexibility by applying one coverage limit across multiple properties, buildings, or locations, rather than requiring each to be insured separately. This mitigates the risk of being underinsured at one location. However, coinsurance still applies and coverage is not unlimited. South Dakota allows blanket policies provided insured meets coinsurance requirements. Thus, B is correct. A, C, and D reflect common misconceptions. Question 14. While examining a situation where a commercial tenant has made significant alterations to a rented space, the building owner questions who is responsible for ensuring the improvements. Which coverage form would address this exposure for the tenant? A. Ordinance or law coverage. B. Builder's risk policy. C. Tenants improvements and betterments coverage. D. Contractual liability coverage. Answer. Correct answer. C. Tenants improvements and betterments coverage. Explanation. Under standard commercial property policies, tenants improvements and betterments coverage ensures permanent fixtures or alterations made by tenants at their own expense. These improvements become part of the building, but the tenant bears financial interest and therefore must insure them. South Dakota law supports this under the insurable interest doctrine. Ordinance coverage A applies to compliance upgrades, not tenant changes. Therefore, C is correct. Question 15. A critical examination of a liability claim shows that a business owner used defective products, resulting in injury. The owner argues that the products were safe when installed. However, the injury occurred weeks later. Under a commercial general liability CGL policy, which hazard is most likely triggered? A. Premises liability. B. Operations liability. C. Products completed operations. D. Contractual liability. Answer. Correct answer. C. Products completed operations. Explanation. Once a product leaves the premises or the insured's work is completed, future claims for injury or damage fall under products completed operations coverage and coverage of the CGL policy. The injury occurring post-completion triggers this hazard. South Dakota insurance regulation recognizes this based on the CGL form. Premises liability A applies. Incidents on site. Thus, C is the correct and legally supported answer. Question 16. The general consensus is that coinsurance clauses encourage insureds to maintain adequate coverage. Which of the following best explains the primary purpose of a coinsurance clause in a commercial property policy? A. To reduce premium for smaller claims. B. To encourage underinsurance for flexibility. C. To ensure insurers don't pay more than their fair share. D. To penalize underinsurance and promote equitable risk sharing. Answer. Correct answer. D. To penalize underinsurance and promote equitable risk sharing. Explanation. Coinsurance requires insureds to carry coverage that meets a minimum percentage of the property's value, commonly 80%. Failing to meet this threshold results in a proportional reduction in claim payments. This discourages underinsurance and aligns with the principle of equity and risk pooling supported by ISO policy language and South Dakota case law. Therefore, D is correct. Question 17. From a historical standpoint, policyholders believed that purchasing coverage was sufficient regardless of risk characteristics. Modern underwriting contradicts this. Which of the following is the most commonly used source of underwriting information in commercial insurance? A. Social media behavior analysis. B. Application and inspections. C. Local reputation of the business owner. D. Volume of business generated. Answer. Correct answer. B. Application and inspections. Explanation. Insurers rely on data collected from applications, physical inspections, loss runs, and financial documents to assess insurability. This aligns with NAIC underwriting best practices and is codified in South Dakota insurance rules for determining exposure and risk rating. Social media and reputation (C) may influence decisions but are not standard tools. Thus, B is correct. Question 18. Upon closer examination, a policy includes both a declaration page and common policy conditions. What is the primary function of the declarations section in a commercial policy? A. Outlines the insurer's obligations. B. Specifies applicable exclusions. C. It identifies named insured, limits, and premium. D. Establishes duties of insured after loss. Answer. Correct answer. C. Identifies named insured, limits, and premium. Explanation. The declarations page serves as the policy summary sheet outlining key details like the named insured, policy period, limits of liability, premium amount, and location of risk. South Dakota follows the NAIC model, which clearly separates declarations from insuring agreements, conditions, and exclusions. Thus, C is correct. A, B, and D are part of other policy sections. Question 19. In the absence of clear documentation, a commercial property claim is delayed due to a dispute over the value of lost property, which calls in the commercial property policy outlines. A method for resolving this valuation dispute: A. Abandonment clause. B. Appraisal clause. C. Arbitration clause. D. Arbitration endorsement. Answer. Correct answer. B. Appraisal clause. Explanation. The appraisal clause is a standard condition in most commercial property forms. It allows either party to demand an appraisal process where each party appoints an appraiser and the two appraisers select an umpire. This ensures objective valuation of disputed losses. South Dakota recognizes this clause as an alternative to litigation, provided both parties comply with policy terms. Arbitration (C) may be used for liability disputes, but appraisal (B) applies to value disputes specifically. Question 20. To illustrate this point, Mr. Lindstrom owns a logistics company and uses leased trailers from multiple vendors. One of the trailers is damaged while parked on his property, and the lessor demands compensation. Mr. Lindstrom files a claim under his commercial auto policy, which endorsement would provide coverage for this situation. A. Drive other car coverage. Broaden. B. Trailer interchange coverage. C. Non-owned auto liability. D. Hired auto physical damage. Answer. Correct answer. B. Trailer interchange coverage. Explanation. Trailer interchange coverage provides physical damage coverage for trailers not owned by the insured but used under a written interchange agreement. It's crucial for logistics and freight companies, especially when responsibility for trailers is transferred between carriers. The standard business auto coverage form BAC does not automatically cover non-owned trailers without this endorsement. Dakota recognizes this endorsement under ISO Form 2394. Thus, B is correct. Question 21. Based on the information, a fire in Mr. Patel's restaurant results in a 2-month closure while repairs are covered under his property policy. He wants to know how lost income will be addressed, which coverage is specifically designed for this scenario: A. Ordinance or law. B. Extra expense coverage. C. Business income coverage. D. Spoilage coverage. Answer. Correct answer. C. Business income coverage. Explanation. Business income coverage reimburses for lost net income and ongoing expenses during the period of restoration after a covered loss, such as a fire. This ensures the business can survive financially while closed. Extra expense. B. Helps minimize suspension but not lost income. Spoilage. D. and Ordinance A apply to separate circumstances. ISO Form CP 030 governs this, and South Dakota commercial property insurers use this form or an equivalent. Thus, C is correct. Question 22. The core principles of contract law are essential in commercial insurance. Which of the following is not a required element for forming a valid commercial insurance contract? A. Legal purpose. B. Consideration. C. Risk transfer. D. Competent parties. Answer. Correct answer. C. Risk transfer. Explanation. While risk transfer is a fundamental concept of insurance, it is not a required legal element of a valid contract. The 4 essential elements are agreement, offer, and acceptance, consideration, competent parties, and legal Purpose, as recognized in South Dakota contract law and NAICS standards, risk transfer is the purpose of insurance, not contractual formation element, thus see PREP. Question 23. The relationship between insured and insurer is guided by good faith. Which of the following scenarios represents a breach of the insured's duty of good faith? A. Reporting claim after 72 hours. B. Failing to list all business locations on the policy. C. Requesting premium reduction. D. Asking to extend coverage to new equipment. Answer. Correct answer B. Failing to list all business locations on the policy. Explanation: concealing or omitting material information, such as not listing all operational locations, can constitute breach of the duty of utmost good faith, which underpins insurance contracts. This may void coverage for unlisted sites. South Dakota commercial insurance law holds that material misrepresentation, even if unintentional, can affect claim outcomes. Act of reporting late or requesting changes is not inherently breach unless done deceptively. Thus, B is correct. Question 24. Across different scenarios, commercial policies must respond to actual versus potential harm. Which of the following best defines a pure risk as insurable under commercial insurance? A. Client investing in cryptocurrency mining. B. Business insuring against fire damage. C. Hedge fund speculating on stock futures. D. Restaurateur betting on food price drops. Answer. Correct answer. B. A business insuring against fire damage. Explanation: pure risk involves only the possibility of loss, not gain, making it insurable. Speculative risk, as in investing or betting, involves the potential for gain or loss and is not insurable. South Dakota follows standard definitions from NAICS materials where perils like fire, theft, or liability are classified as pure risks. Thus, B is correct. Question 25. When presented with a workers' compensation claim in South Dakota, an employer disputes the legitimacy of the injury, stating it occurred off premises while the employee was commuting. Under standard workers' compensation rules, what is the likely result? A. Claim denied due to coming and going rule. B. Claim approved because the employee was in uniform. C. Claim approved because commuting is always covered. D. Claim denied unless the employee clocked in remotely. Answer. Correct answer: A. Claim denied due to coming and going rule. Explanation: under the coming and going rule, injuries sustained during a regular commute are not compensable as the employee is not acting within the course and scope of employment. South Dakota adopts this principle in its workers' compensation statutes. SDCAS 211. Exceptions exist for company vehicles or special missions, but generally standard commuting is excluded. 8. Correct. Question 26. The implications of coinsurance are misunderstood by many policyholders. Which of the following best illustrates the purpose of the coinsurance clause in commercial property insurance? A. To ensure premiums are charged fairly for underreported exposures. B. To allow insurers to pay full claims regardless of coverage amount. C. To shift the burden of risk to reinsurers. D. To eliminate the need for deductibles. Answer. Correct answer: A. To ensure premiums are charged fairly for underreported exposures. Explanation: coinsurance requires insureds to carry a percentage of coverage relative to property value, usually 80%. If not met, a proportional penalty applies, ensuring that insurers receive fair premium for the risk assumed. This discourages underinsurance. South Dakota uses ISO forms and enforces this through underwriting guidelines. A is the clearest and correct rationale. Question 27. While it is true that commercial general liability (CGL) policies cover many liability exposures, exclusions still apply. Which of the following would most likely be excluded from coverage? In a standard CGL policy: A. A customer slips and falls in a retail store. B. An employee sues for on-the-job injury. C. A visitor is injured by falling merchandise. D. A tenant damages another tenant's unit. Answer. Correct answer: B. An employee sues for on-the-job injury. Explanation: CGL coverage excludes bodily injury to employees as this is addressed under workers' compensation insurance. This exclusion is outlined in the employee injury exclusion clause of the CGL form ICG 1. The rationale is to avoid duplication of coverage. South Dakota follows NAIC model language, making B the correct answer. Question 20. The predominant theory suggests that endorsements serve to tailor policies. Which of the following is the best definition of an endorsement in commercial insurance? A mandatory condition applying to all policies. B, a general statement of coverage intent. C, a document modifying the original terms of the policy. D, a legal defense used in claim litigation. Answer. Correct answer. C, a document modifying the original terms of the policy. Explanation. Endorsements modify, expand, restrict, or clarify the provisions of the original policy. They are binding once attached and signed, and they become part of the legal insurance contract. South Dakota Administrative Code recognizes endorsements as contractual amendments under SDA 81145. Thus, C is correct. Question 29. In summary of recent claims handling trends, insurers emphasize prompt reporting. What is the key consequence if an insured fails to provide timely notice of a claim under a commercial liability policy? A, the policy is immediately cancelled. B, the insurer must still defend but not indemnify. C, the insurer may deny the claim if prejudiced by the delay. D, the deductible is automatically increased. Answer. Correct answer. C, the insurer may deny the claim if prejudiced by the delay. Explanation. Most policies require the insured to provide prompt notice of claims. If notice is unreasonably delayed and the insurer is materially prejudiced, e.g., cannot investigate or defend properly, the claim may be denied. South Dakota law, reflecting NAIC model policy conditions, upholds this condition. However, if no prejudice occurs, courts may require the insurer to perform. Thus, C is the correct legal outcome. Question 30. Given the circumstances, is Rodriguez operates a manufacturing facility insured under a commercial package poly CPP. After a severe storm causes power outages, a facility's machinery suffers an electrical surge causing damage. The insurer denies the claim, stating that the cause of loss form excludes electrical damage not caused by fire. What is the most appropriate explanation for the insurer's denial? A, electrical damage is never covered under commercial policies. B, the basic causes of loss form excludes electrical injury except when it results from fire. C, the business income coverage does not apply to machinery damage. D, the policy requires the insured to maintain surge protectors. Answer. Correct answer. B, the basic causes of loss form excludes electrical injury except when it results from fire. Explanation. Under the basic causes of loss form CP 1010, electrical injury or disturbance to electrical devices, appliances, or wiring is excluded unless it causes fire. This is a common exclusion because such damage is often frequent and costly. Coverage for electrical damage requires endorsement or higher tier forms. Special causes of loss, open perils form, which may cover such events unless specifically excluded. South Dakota insurers commonly use ISO forms which incorporate this language explaining the denial. Thus, B is correct.